Greetings, members one and all of the Salivation Nation. Why did silver prices spike to almost $50 an ounce in 2011, and why did they fall so quickly? Those are some questions that have been asked by some members of the community here, so I thought I would take the time to answer them in this video. But first, we must look back into history a bit. Some of us may remember hearing about the spike in silver prices in 1980 when the Hunt brothers tried to corner the market. Well, there was some similarities and differences between 1980 and 2011. $50 in 1980 was a lot more money than $50 in 2011. And the economic reasons were somewhat similar, but different as well. Similar in the fact that there was some worries about the economy, but different in the catalyst behind those worries. In 1980, we had great inflation, and so there was fear of more of that. But in 2011, we had an economic crisis with the collapse of Lehman Brothers and the housing market, and predatory lending and quantitative easing going on. And we didn't have anybody trying to corner the market in 2011, although a little bit later we hear about J.P. Morgan acquiring more silver than the Hunt brothers did during their attempt. However, there's a lot more silver out there today, discovered, now than there was back then. And that plays in part of the reason why the prices had spiked up so high in 2011. So we look back at the economic crisis and we see what was going on with the quantitative easing, the printing of money wholesale, or the digitization thereof. Federal Reserve Ben Bernanke was at the helm of that, and they called him Helicopter Ben because he would just drop money out of the sky, throw money at every problem there was, and the more money supply, the more chance that the money will become worth less. So there could be a potential that the dollar could collapse, and the fear that it could, or lose a great deal of its value. A lot of that money went overseas, and essentially a lot of it went into the banks and Wall Street and the like to bail them out, but not Main Street. And so economic stagnation had occurred, and was fear of another double recession, a double dip recession coming down the pike. So there was that aspect of it too. But the other part was what seemed to be a shortage of supply of silver. But the reality is that there had been an increase in supply in silver for emerging technologies, and such as photovoltaic, the solar panel technology that had really started to grow around 2009 and 2010, and other industrial uses of silver. And when people started realizing where the economy was going, and there's a great fear of what would happen with the economy, people started acquiring more silver. And specifically, we saw the advent of more usage of 4/9 fine silver as opposed to 3/9 fine silver. So it was this great demand for 4/9 fine silver out there, and it seemed to spill over to the 3/9 fine silver. And that demand created a bottleneck in acquiring and getting silver to the right channels to get into people's hands. And mostly this was all related to the larger dealers trying to acquire. And so the prices started to creep up a bit, and it had continued. So it was this fear of shortage supply where there really was no shortage. It was just a bottleneck in getting to people. You heard about the cases where the Silver Eagles, they had run out of Silver Eagles, or there was a shortage of Eagles, but really it was a production supply problem, getting the blanks to the U.S. Mint and the like, and all that had occurred. And in reality, from the years, especially in 2009, 2010, and 2011, supply of silver had actually increased. And then you had the offset futures markets where the actual price was going up above what the futures price was. And then they came into parity with each other, and they inverted to the other way, so that the futures price was lower than the actual silver price. And then the silver price started to fall dramatically. But I will never say that silver has crashed, because silver can never go to zero. It can lose half its value. But in my mind, that doesn't consider a crash. If anything, what happened in 2011 was just a huge spike, like in 1980, for unusual circumstances, and that exactly was the case in 1980 as well as in 2011. But like most markets, there is a correction, and things work themselves out with supply and demand. When demand increased, puts a pressure on supply, it also puts pressure on the supply chains. And that's what you saw in 2011. There was a disruption in the supply chain. They were able to get the silver to us, but there was plenty of silver out there. With that being said, we saw the prices go up really high, close to $50 an ounce in 2011. And ever since then, especially from about 2013, the prices have steadily dropped back down. And now they are at a point where they are, under $20 an ounce, well under $20 an ounce. And I remember when $20 an ounce was considered a bargain. And but nonetheless, they are holding steady, and they will continue to hold steady. And I think we are at a normal level, but slightly undervalued at this time, I believe, especially when you look at the gold to silver ratio. Because we did see gold spike up as well for much of the same reason. But silver, I believe it is now slightly undervalued when it's all said and done. And I think that's mainly because of there may be a situation where people realize that, hey, there's a lot of silver out there. You can get it anytime you want to. And it may be a false sense. You have sort of a wedge pattern and the prices now, and the dips, and it's stabilized a bit. And some analysts say that that's ripe for a breakout or a spike. We shall see. But I do feel that 1980 and 2011 were very unusual circumstances. But in short, that is why, from what research I've done, that is the reason why silver had spiked to such highs in 2011, because of the seeming supply issue and a psychological shortage in investors' minds. So they thought we better grab as much of silver as we can before it runs out. And of course, they were sorely disappointed when it came to be that it wasn't an actual supply problem. It was a supply chain problem. And getting the silver in people's hands took a little longer than they had hoped, some of the suppliers. But just understanding the markets and where the futures were, that's kind of where things settled in. So you had that spike, and then we saw it dip back down. But nonetheless, it is fascinating to see how things have occurred. I'll never forget the private message I received from a viewer, or maybe it was a drive-by viewer. In other words, somebody who just popped in and saw one of my videos and sent me a message, an angry message about how they had spent $100,000 in silver eagles, investing in silver, and they lost about 40% of their value and had to sell at such a loss, and was very angry and wanted me to try to explain to them how or why this investment could have failed. And they were done with silver completely. Well, and my answer to them, just as with anyone else who bought at such highs, is to understand what silver really represents. Number one, the first mistake of that gentleman is thinking it was an investment. But that's what happens when most things spike up. You know, people think, well, hey, it's just going to go up even higher, so I better get in now while it's good, you know, while it's on its way up. But there's a dynamic to silver. Most realized, and even back then, I don't even think that I realized that it would crash or that would fall back down so quickly. And again, it doesn't crash because to me, what this is, it's got thousands of years of history. It'll never go to zero, but it will correct itself to a seemingly more natural value, and that makes it not an investment. It doesn't pay a dividend, but it holds its value. It's a preservation of wealth, so to speak. And that's how you should look at silver. It's like a savings account. And once in a while, if you have a savings account and interest rates go sky high, you can make a lot of money on that savings. But then it could turn around, you can make less than 1% on your savings, like what I'm making now on my savings account. Way less than 1%. But that's all right, because the money that's in there, actually, the money that's in there is losing value, whereas silver is maintaining its value by and large for the most part. There is some volatility in the price swings one way or the other, but there's unusual spikes, there's unusual dips, and we just go with the flow, and we're in this for the long term. But that is basically what happened and what caused the large increase in prices in 2011 as compared to 1980. And so I hope you enjoyed this video. I hope this answered some questions. And if anybody else has anything to add, feel free to post it in the comments below. Feel free to post any questions you have in the comment section below. And I would like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.